Unfortunately, good things don't last. The last few days we've had a very nice pump and run up, and unfortunately we've now experienced a bit of a correction in the market. And yeah, it's one of the days you wake up and then the price slumped minus 10%. But that's why we love cryptocurrency. The volatility keeps everything very exciting. And that's it. So hope you're having a great day wherever you are. Grab a coffee and enjoy this short market update with news. So first of all, we're going to have an overview of the market, look at why Bitcoin especially and the rest of the cryptocurrency market crashed last night. Then we'll look at what Deloitte has in stock with us with Ethereum, Louis Vuitton, what they're doing in the blockchain field, and why banks have been fined €1 billion for currency rigging. So that's it. I'm Kieran from CryptoBoost, and enjoy the video. So first of all, Bitcoin dropped now to $7,162. However, it slightly touched the $6,200 range due to the flash crash, and it recovered a bit to $7,162. So I'm wondering if it's going to manage to hold this position or it will go to the next support line. The same is with Ethereum, a minus 6% drop in the last 24 hours. Bitcoin Cash minus 10%, Stellar minus 10%. So we've got a few double-digit drops in the last 24 hours, which was to be expected after this massive run-up that we have experienced in the last 10 days. Now, the global cryptocurrency market cap is now at $225 billion after we have seen a very, very nice run up to $252 billion. Actually, sorry about that, to $259 billion. And with everything that happens very often when we've got a very strong rise and increase in price, we need a bit of a correction phase and a retracement phase where we correct and go back to the mean, and very often what happens afterwards is that we have a nice bounce back. And what's interesting is to see if we manage to hold the support at the 221 billion, if that will become our new global market support, and if we will continue to go to newer highs and have again a newer high in this year. Now for BTC USD, that was a very big red candle that we've seen. Let's put it on the 4-hour time frame to have a bit of a better overview. And we had that was around 12 o'clock last night, the flash crash, which caused the price to drop from $7,900 down to a price of $6,600 on Coinbase. Now the thing is, here we had a bit of a sideways trading with bearish divergence, so a lower high on the RSI, and the RSI is on a very, very overbought situation, so this was something to be expected. Now here on my bottom market finder, this is a very good indication for my dollar cost averaging strategy. I'll link it down below. That's the dollar cost averaging strategy I use to accumulate, and that would have been a good position moment to accumulate if you're considering increasing your portfolio. Now, in my opinion, it would be very important to see if we can hold this $6,800 support line, and if we don't manage to hold that, then the next support is at $6,000. And it's very important that we manage to hold these support lines if we are expecting to have higher highs in the next few weeks. Now, if we look at Ethereum USD, also on Coinbase, then it will be interesting to see where the support lies for Ethereum USD. And in my opinion, the next support or strong support is at $180. Now there are a few smaller supports along the way, but since the price increased so drastically, in my opinion, next strong support is at $180 US. So dollar cost average, baby, dollar cost average. That's the way to go to make sure that you mitigate your risk over a longer period of time. I can't say this enough because, in my opinion, very often people FOMO and the greed takes a hold of them and they start buying when the price just goes up because they feel like the sky's the limit and the price will just continue to go up. However, in all markets, you always have a retracement phase, and that's the time where you should be thinking about accumulating. Now, let's see, we'll talk about why or how the market flash happened last night. So shortly before 11 p.m. EDT on Thursday night, we reported that crypto suddenly jerked lower with Bitcoin flash crashing over 15%, sliding as low as $6,395 on Bitnex XBT USD perpetual swap, the most liquid Bitcoin contract globally before bouncing back. XBT USD is the Bitcoin USD trading pair, and as you can see on this image, the price crashed, pulling along many other cryptocurrencies with it, since many cryptocurrencies are bound with the Bitcoin as a base currency. So that had an effect on all other currencies as well, even though the flash crash happened on Bitcoin. The insta crash took place in a news vacuum and without an immediate catalyst, looked technical and position led on the derivative side. So even though the indicators also showed an image that a correction would happen, however, even if the indicators hadn't shown that, the flash crash would have still caused a very big decrease in price, just through the fact that the flash crash triggered many stop losses on BitMEX, because people had either long positions and they got liquidated because the price fell below their stop target. This $35 million volume shouldn't have been too much of a deal in itself. However, Kraken had a similar event a few weeks back on the 25th of April, but Bitstamp accounts for 50% of the Bitcoin index at BitMEX, the largest Bitcoin derivatives exchange. This index is being used to trigger liquidations of the Bitcoin XBT USD perpetual swap contract. So, as a result, more than 200 million of sell liquidations occurred, which took the market down with it. So you have to understand, even though the price may, if you only look at the price, the Bitcoin that had been dumped, it wouldn't have had such a big effect if there hadn't been so many liquidations. It pulled the market even lower. So here you've got the order book and the BitMEX XBTC USD liquidations. So you buy liquidations and sell liquidations, and at 4 a.m. here the sell liquidations from long positions has a very high amount. Hopefully you can see this. I can put it a bit bigger. All right. Now, hopefully to a bit better news than flash crashes and liquidations. So in my opinion, first of all, this market is going to recover a bit. This was an unfortunate event. Hopefully we're going to be able to keep our supports at 6,600 US dollars. I think no, sorry, I can't remember what I said. I think it was for ETH USD was 180 US dollars, and for BTC USD it was around 6,800 US dollars and 6,000 US dollars. Sorry, I got sidetracked there a bit. So let's go to a bit more positive news, and that's with Bitcoin now accepted at Starbucks, Whole Foods, and dozens of other major retailers. And I think this is very good in the light of things, since this is a good direction for mass adoption and the mainstream cryptocurrency, the path that we are all looking forward to. So we believe that the best way for global commerce to become more efficient and accessible is by bringing cryptocurrency to the masses, says Flexa app makers. Some of the world's biggest retailers have begun accepting cryptocurrency payments in the form of Bitcoin, Ethereum, Bitcoin Cash, and the Gemini dollar. US-based payment startup Flexer has enabled Amazon-owned Whole Foods, Nordstrom, Starbucks, and dozens of other companies to take Bitcoin payments. And I think this is already a very good step, especially since that's from Amazon, and hopefully in the future Amazon will enable these payments to be done online on their online store, which it's a very, very big market, and people will see that cryptocurrencies can actually be used for payments and not just for investing and increasing your portfolio value. So more than 10 years after Bitcoin was founded, user adoption remains one of the biggest challenges still facing the world's largest cryptocurrency. To solve this, Flexer built an app called Spedden, and if you haven't noticed, it's a wordplay on the word spend, and it's probably coming from the word hold, hodl, so yeah. Yeah. Which allows cryptocurrency holders to make instant payments to merchants that accepts Flex as a payment provider. The Flexer team has decades of payments experience. At this point, we believe that the best way for global commerce to become more efficient and accessible is by bringing cryptocurrency to the masses. And I agree completely with this point, since that's something that we need. We need people to be able to push the button, use cryptocurrency as a payment, and not be thinking about what's the technology behind it, because the mainstream doesn't really care about the technology. The same thing with credit cards. People don't care how credit cards work. They're just interested in just swiping their credit card and the payment is going through, and not thinking about how long is this transaction taking. I have to look at all the that I've got this installed and that installed. They just want to have a mainstream, easy way to use cryptocurrency, and that's the only way that will become mainstream. So by making cryptocurrency spendable in mainstream commerce, our sincere hope is that we can bring the full promise of blockchain technologies to people all over the world. And that is why I'm so enthusiastic about the whole blockchain and cryptocurrency space, because so much is happening, so much growth in such a little amount of time, and in my opinion this growth is just going to be getting bigger and bigger, and more people are going to be accepting it. So no additional hardware or software is needed on the retailer side in order to integrate the payments. They only need to allow Flexer to be a payment provider on their existing systems. And now, even though at the moment the cryptocurrency is very volatile, the merchants can decide that they receive the cryptocurrency either as a cryptocurrency or it will be converted directly to US dollars. So like that, they can mitigate the risk of the volatility. And yeah, that's one of the biggest downsides that people have mentioned when using cryptocurrency as a payment, since you can't just sell something and then one day later the cryptocurrency just drops 10% in price and you've lost 10% of what you sold, and that's it. So I'm very bullish on the whole aspect of this spending app, and I hope that it will also be accessible to in other countries. Yeah, happy about that. So let's talk about major Ethereum project launch from Deloitte, teased at Consensus 2019. So you might have read that Deloitte has been experimenting with VeChain, but now they're talking again about Ethereum. So it looks like they haven't completely or have not abandoned Ethereum at all. So Deloitte commits to Ethereum despite VeChain rumors. There were recent announcements that Deloitte was moving its clients to VeChain. As it turns out, the firm will remain committed to working with Ethereum. Deloitte believes strongly in multi-platform development, and 50% of our projects are built of Ethereum. So that's very good news for Ethereum. A member of Deloitte's team affirmed a positive opinion on Ethereum, stating that Ethereum is a robust network that has been tested, is open source and transparent. We will launch a very large project by the end of the year on Ethereum platform. So this is very good. Probably it's going to be B2B, but this is very, very interesting, especially since Deloitte is one of the biggest of the big four audit and consulting teams. So multi-blockchain development, one crypto network will not rule them all. VeChain will be used for certain clients who have different needs and specific use cases The main reasons why VeChain was chosen for those projects are the client's individual preferences and the cost of transactions in the Ethereum network that were at the times very high. So even though Ethereum is being used, VeChain will also be used for a lot of projects, and in my opinion, that is very bullish for both cryptocurrency platforms. So VeChain has a very good use case, especially when you need a high transaction per second. A lot of TPS and cheaper transaction fees. So both projects, I'm super bullish on both of them. And in my opinion, this is not financial advice, but in my opinion, those are good assets for any cryptocurrency portfolio. Now let's continue with this luxury brand, and that's Louis Vuitton and Christian Dior. Owner unveils blockchain to platform to verify luxury goods. So very often these luxury brands have a big problem with counterfeit goods in China, in Asia, and more or less everywhere in the world. And so the consortium says the system known as Aura is designed to serve the entire luxury industry with powerful product tracking and tracing services. LVMH brands including Louis Vuitton and Christian Dior are already involved in the project, and discussions are underway to extend Aura to other high-end names within the group. Aura makes it possible for consumers to access the product history and proof of authenticity of luxury goods from raw materials to the point of sale, all the way to second-hand markets. And I think this is also very important to show that blockchain projects don't all have to revolve around cryptocurrency and payments, but can also serve in other areas, such as making sure that products are authentic and just to show where they're coming from and so on. So I think this is very good that they're moving into the space and showing what else can be done with cryptocurrency, blockchain solutions. Let's continue with banks. And I think this is very funny, since in my opinion, banks are the main anchor, the main source that is pulling back many of the blockchain projects, especially in the last few years, even though some banks now are turning around and realizing that many blockchain projects have a use case that they can also use, very often XRP, but also other cryptocurrency projects can be used by banks. However, very often the reasoning comes against cryptocurrency and blockchain is that it's used for nefarious actions, for criminals, for money laundering, and so on. So I always think it's very hilarious when there's news about with banks doing these nefarious actions themselves. So in this case, the banks have fined $1 billion by European Union for currency rigging. So 5 banks have been fined £1,935 million, around 1.8 million US dollars, if I do the exchange correctly in my head. So, and they're fined by the European Commission after traders clubbed together to rig the foreign exchange market. 4 banks in the banana split cartel: Barclays, RBS, Citigroup, and JP Morgan. So it's not a surprise to me to see the biggest anti-cryptocurrency company in the mix, and they were all fined 811 million euro in all. So 3 banks in the Essex Express cartel: Barclays, RBS, plus MUFG, were fined 250 million. So that all in all around 1 billion euro, which is probably around 1.5 billion US dollars. So Legacy Matters Competition Commissioner Margaret Vestager said the bank's behavior undermined the integrity of the sector at the expense of the European economy and consumers. RBS said its 249 million share of the fines was fully covered by existing provisions. So in my opinion, very often when this happens, the fines are way too low, and I believe the fine should be much higher than the profit that these banks have gained during the time that they could perform these illegal activities. but very often it's not the case, and the fines are just considered a cost of doing business. So I'm hoping for a much more transparent system where banks are using the blockchain and can be held accountable for all their actions. But I guess that will take a lot of time and technological and financial developments to move forward in that direction. In my opinion, that's something that we'll be working towards in the next 10 years, and I'm looking forward to when that's happening. So hope you enjoyed this news and market update, and I'll catch you on the next one. Bye bye.